haven't been following that closely until you've just published this, and so my question might not be that great, but
that's fine.
Last year, phenylephrine, like Sudafed, was found to just not work, just to be a placebo. And how did it get approved in the first place? Well, they used an endpoint that they thought was a good corollary or whatever for the actual thing that they're looking at. And is there a possibility that the endpoint here is sort of like malleable like that, where it can show positive results and not be related to Alzheimer's?
That's an awesome question. So I actually think it's the opposite, because the endpoint is cognition. And the problem with Alzheimer's is we really want to see the cognition change, which would be the home run. Imagine somebody decaying from Alzheimer's and then all of a sudden their decay stops or reverses. It'd be amazing. But the problem with Alzheimer's is we're defining the disease as a cognitive disease when we should be looking at the disease process that begins 20, 25 years before the cognition actually fails. So people with Alzheimer's and people with genes that cause Alzheimer's, the amyloid beta and the tau that builds up in this disease starts 20 years before the memory fades. So the drugs that help the memory, like Aricept and so forth, they work on a short term. They don't modify the disease. They're just sort of amping up the brain's cognition. This drug doesn't do that. But even if it sort of was a good idea, they're testing it far too late in the disease pathogenesis, where the patient's looking at 5 years left to live usually. You want to treat Alzheimer's 20 years ago. And it's very hard to do that because you have to wait a long time for a clinical trial to come out with. And that's why you might want to look at a surrogate endpoint like amyloid beta levels or some other neuronal damage level. And, that would be a good thing to do. So they're really testing like the important endpoint, which is cognition. The only more important endpoint would be survival. So the surrogate is actually where they should go because that is more realistic. And it's probably better to treat the disease that way. This is a lot like treating third-line metastatic lung cancer, which is like after you've failed 2 attempts to treat the cancer, this is on your 3rd attempt. Usually, no matter what tumor type it is, that's like a 3-6 month kind of survival. And it's very hard to improve in that disease setting. So, that's sort of the equivalent here. When if you treat the cancer before it spreads, you have a much better chance of actually dealing with it molecularly. By the time it's the end, everything's going wrong molecularly and in the systems and the cells, that there's no real one way to sort of save the ship from sinking. But early days of cancer, you can. So I think that sort of analogy does work for what's happening here. And that alone is a good enough reason to short Cassava. Forget the people that got arrested or sued for fraud. Forget the pharmacokinetics. Forget the mechanism of action. Just the idea that they're doing a late stage Alzheimer's trial, it's 98% so far that have failed. So why buy a stock where, you might lose 98%? Well, if it's 1% of your portfolio, great. But the people out there that have huge positions, they should trim. But the people who you have 5% of your portfolio in this, look, you're going to learn something. You're either going to learn that you're better at biotech stock picks than Martin Shkreli, or you're going to learn that you're not as good. And if you're better than me at biotech stock picks, there's hundreds of more drugs to come out that you can prove. And, I'll go back to my hole. I'll become a computer programmer. I'll do something else. But my career has been in doing exactly this. And I will be right on this one. And anybody along will be wrong. So if you want to test your acuity, your ability to do this, just do it with a small amount. It's kind of like, your first fight in MMA, you put your life savings on it. Well, you don't know if you're good at MMA yet. Why would you do that? I'm Brock Lesnar. I'm going to beat you up. And if you want to bet that you're better than me, start small. Don't go all in. If in your first poker hand, do you mortgage your house and go all in on your first poker hand? It'd probably be better if you play poker for a long time. If you want to play for money to start with a couple of dollars slowly. And then, as you get more confident and more successful, put more money in. But I think a lot of people here are excited about, oh my gosh, I can make 100x or 1000x. Let me just put half my portfolio in this. And that's just irresponsible and nuts. A lot of people have that gamble, that itch that they want to scratch in gambling. And honestly, no matter what I say, I don't think I could help those people. And they're going to do what they're going to do regardless. But You know, when I started this stock called Mankind years ago and I published about it, a lot of people thanked me and they said, you know, you got me out of that stock and I would have lost all my money and I appreciate it. And Daniel Kahneman and Tversky, his partner, wrote a lot about this like behavioral economics thing where losses, the fear of losses is much less scary than the excitement of gain. And so people will do reckless and risky things because they feel that gain potentially coming and they'll ignore all the bad stuff. And they'll feel like, why be prudent when I might be rich? And, you know, those people are not good investors. But there's nothing I can say that's going to change their mind. I can only say, like, you have nothing to, right? Like, if you're good at biotech picks, you will make tons of money. You will become a billionaire. I know somebody that became a billionaire just betting on binary events. If you're really good at this, it doesn't matter if you have 1%, 10%, or 100% of your portfolio, because there'll be another Sava. And because obviously you're very good at this, because you got it right, you will continue to make money in future Savas. You have nothing to prove that you're the best, that, you know, 100% of your portfolio. If this could cause you financial harm, reduce your position, you'll still make money on the win. If this is a reasonable size position for you, I wish you luck. I hope you make a ton of money. I think I'm going to make the money, not you, but I'll survive if I'm wrong, and you'll survive if you're wrong. What I don't like to see is somebody that's all in and putting their financial livelihood on the line over something they don't even understand because they read about it on some message board or something. But if you have a responsible bet of 5%, 10%, quite frankly, that's still a lot, or 1%, God bless you. But if you're here 50% or 100%, I just feel like I have to say something. Anyway, Corey, you want to say something?
Oh, I just wanted to say I respect all the work that you've done on this bet. I had come to a similar conclusion even after being long Sava on the way up and being so hopeful about it. But as more and more data came out, I really couldn't reconcile it. And so I switched. And I hope I'm actually wrong, because I think that this kind of drug and this kind of data that they, you know, originally it showed before all of the nonsense came out about it being adjusted and so forth, that kind of drug would just change so many people's lives. Having been personally impacted with family members who've had Alzheimer's, I think that I would hope somebody in the next few years with all this technology that's coming out will invent some way to address this need. But I just wanted to say, like, I understand that it's super risky for everybody. There's a lot of positioning going on here. And I just hope that people are making wise decisions for themselves.
Oh, thanks, Corey. And what I'd say is I made a tweet just recently that Alzheimer's is going to bankrupt America and the world. As we get older and older, we solve cardiovascular issues. Unfortunately, not for my father, but for many people, cardiovascular issues like blood pressure and lipids are disappearing, diabetes as well. And that just means we're going to be 80 and 90 and 100. And that just means we're going to die from Alzheimer's. At this rate, we have no Alzheimer's drugs. Cassava is not going to help. But we need Alzheimer's drugs. And we hope that we can get some Alzheimer's drugs. The problem, and Bill Ackman responded to my tweet and thought it was a good idea. Recently, I tweeted that there should be exclusivity for anybody that wants to make an Alzheimer's drug. Their patent life should not matter. If you make an Alzheimer's drug, you should get 10 or 20 years of patent life automatically. And FDA has done this before with orphan drugs. There was such a need for orphan drugs because Big Pharma didn't care to make them, that they made an incentive, a 7-year incentive. No matter what your patent situation was, you get 7 years no matter what. And so I propose, a 10 or 15-year similar thing for Alzheimer's, because we need to incentivize people to do these really long trials. A friend of mine, as I mentioned, is an Alzheimer's startup guy. And he said, Martin, even if we had that, I don't think I could afford to do a 5 or 10-year clinical trial. And there are ways of handling that. But we really have never dealt with a disease that's a 30-year progressive disease, and that when you get the symptoms in year 25, you just fall off a cliff. So it's a very odd illness. We need to stop the disease from year 1 to year 25. Trying to stop it at year 5 doesn't do anything. And we don't have that many tools and clues on how to do this. So it's a tough spot. And when I look at these companies, again, I have a heart, a lot of different illnesses in my family. I want people to be healthier. I want us to apply science to get that. But at the same time, the drug's structure is set in stone. It will not change no matter how much you or I say nice things or say bad things. The molecule is the molecule. The atoms are where they are. and the drug either works or it doesn't, we cannot change with our hopes and dreams whether a phase 3 works. And this phase 3 will not work. I'm dead certain of this. And, if you want to donate to charity, that's fine. But I ultimately think that, this isn't charity. You can donate to an academic lab that's researching Alzheimer's. That's a much better use of your money. So in any event, I think there's just a lot of greed from people who are long the stock. They just hope that they can make 100x and they make it the easy way. And they will learn that this is not the easy way to make money. It's the easy way to lose it. 𝗕𝗏𝗏 or anybody else, do you want to?
I'm a physician. I agree with your thesis, just looking at it. Did you talk about why you think the stock's pumping up like 23% today?
Great question. So I'm glad you agree, Juan. Stocks are weird things. Over 25 years of trading, literally professionally at hedge funds and for myself, I'm reminded of Elon. So Elon Pharmaceuticals, which no longer exists, made the first A-beta antibody called bapineuzumab. And there was a book written about it called Black Edge. And bapineuzumab looked great. It was the first drug to ever, interact with the causal, what most people felt was the causal problem with Alzheimer's, amyloid beta aggregation. And the stock went up a ton right before their data came out. The data was bad and the stock dropped 90% and the phase 3s failed. I think that there's exciting anticipation. For example, at Powerball, a lot of people buy their ticket right before the Powerball drawing. It's hard to short. You got to go locate the stock and you got to do all this stuff. And so hedge funds can't react instantaneously if the stock goes up or something like that. And after the GameStop kind of fiasco and AMC, a lot of hedge funds just stopped shorting completely. Most of the biotech hedge funds I know have just said, what's the point? But the reality is drugs still fail. 98% of Alzheimer's drugs fail. We don't get that disease. We don't understand it. This thing has nothing to do with it. There's no chance. But, long buyers are still want to play the lottery. They still want to scratch the itch. They don't want to invest. They want to gamble. The stock market's a casino to them. And that's fine. And if they want to gamble on this, as we all know, the casino wins. I will write you the call options. I will write you the long stock that you want. And when the bill is due, the bill is due. You might win for now, just like somebody might have a hot hand at blackjack. But like all gamblers, they will not be able to quit, and they will, ultimately meet their maker. So I think they're, the action before the actual event is often pretty crazy. Sometimes it goes up a lot, sometimes it goes down a lot, sometimes it does both. I've seen all of the above. Right now there's a depression company called Neumora, NMRA is their ticker, and the stock has dropped by 50% before their results came out. People think that most of Wall Street thinks those results will be bad. So the stock is selling off before the results. Here in Cassava, most of Wall Street thinks the results will be bad too, but the stock's gaining in front of the data. And again, possibly because of the lotto ticket effect, possibly for some other reason, possibly just because, look, somebody might say, you know what, I want to buy the stock, and I'm going to buy $100 million of the stock, and I'm going to mess with all the short sellers. Maybe not me specifically, but all the short sellers, screw them. Or they decide they want to buy 100 million stocks for no reason. You can make a stock go up if you have enough money. And to me, none of that stuff matters. Does this drug work is the only thing that matters. And I think investor psychology is very important to traders and investors. But for me, I just try to figure out, okay, you have one product. It either works or it doesn't. And I'll live with a little volatility. And that's why I always suggest when people short these things that they do a combination of shorting the common stock, selling calls, and buying puts, and making sure that no one kind of move can wipe them out. And so obviously, if you just short the stock, this move's been a little bit painful, but assuming you can hold on to it and you didn't put all of your money into it and that you had some kind of cash position, you're still able to survive this move up. If you've put all of your money in it, you made the exact same mistake the longs did, even though you're going to be right in the end. You have to be careful. The whole market can be irrational longer than you can be solvent thing is still a real thing. And in the GameStop era, it's even more of a real thing than it ever has been. So I feel like, you just have to protect yourself at all times. So I hope that helped.
So basically the thesis is just very excited retail investors are piling in, and that's the action we're seeing now.
Yeah, that's what I think's happening.
Hey, Martin, just to follow up on that last question, actually, I know you have these short-dated puts. Are you just going to keep on buying more? You want the data to come sooner than later to kind of survive these potential moves, but are you going to just keep adding to those puts and as the stock goes up potentially?
Yeah, I have a bunch of dry powder. I think that a really good strategy is to buy the weekly expiring puts because one day they'll pay. And they have to be at the right price, but there's only 20 days left, business days left until the results come out. It just turned 4 o'clock, so the results might come out the 2nd. Usually press releases come out right after the market. But at some point there will be the results, and if you own puts that are very cheap, you're going to be in you're going to be in heaven. But the puts will get more expensive as each week comes, as it's more likely that the results will come out. There's no free lunch, and the puts that expire a month or two from now are extremely expensive because everybody knows this. Look, as smart as I think I am, there's nothing here that I said that isn't obvious to everybody watching. And that's why those puts are, you even have to pay up to buy the 5 puts. So there's nothing I'm saying here that's like super genius or anything like that. I'm just putting one and one together. I've seen this before, and I'm willing to say it publicly, which a lot of people aren't. Joe Springer has like 1,000 shares or something, but he's made 500 videos about this. I don't know what he's going to do after this. It better work for his sake, right? What else does he have going on? I'm trying to help you. Help. Martin, help. Look at my AXON video. Did you see that? I tried to help you then too, but you weren't born yet. You were in the baggy womb. You're not in the bag holder universe yet. You were still too young.
This is how AI.
Your mother and father planned to make a bag holder child, but you forgot.
1,000 things.
You were too young. But this is your original baggy
clinical trial analysis. I know a lot of you folks have asked, how do you look at a clinical trial study?
See, how do you look at a clinical trial? 2017. I don't have ad block because I have YouTube TV, but that's on this account. So we can watch it on this account if you want. So you don't have to get bothered by ads. Is that okay? All right, let's do that. Cool. We restarted it.
Trial is a phase 3 clinical trial, also known as kind of the pivotal last big clinical trial. The economics are that they owe GSK a little bit of money. And
now it's funny is that very few people know that I was negotiating with GSK for this very drug. I could even tell you the name of the guy at GSK who did the deal with me and Vivek. He was bidding us against each other. But yeah, this was 2017, and I predicted that this Alzheimer's drug would fail, and guess what? It did. Now, 7 years later, I'm predicting that this Alzheimer's drug will fail, and it's going to. And if that's not good enough for you, predicted that this company's trial would fail, and instead of doing a YouTube, I did a 44-page report 9 years ago, and this company failed too. So I don't know why you're upset. This is a help. This is helping you to avoid losing money, because you are on the path to losing your entire investment in Cassava. I'm not trying to trick you. I don't care enough to do that. I'm just good at this. Watch this hour video, see if it reminds you of anything. Look at all the data. The data's bad. Here's part 2.
Hey guys, this is Martin.
This is another 3 hours. It's like a 10-hour video series about the drug company. I'm 100 times more convinced that this drug, 𝗓𝗏𝗡, will fail than this one. This was like, still had a chance. The 𝗓𝗏𝗡 has no chance. So just, look at, like I said, if you want to buy a lotto ticket, Powerball is fine. Just don't put your whole account in it. If you want to buy 5-10% of your account, there's nothing wrong with that. But you know, you might as well just play Powerball, man. This is what you're doing. Do you see these lotto tickets? This is you. This is you right now, buying lotto tickets at the grocery store. They call this a poor tax. Why? Because poor people who are financially illiterate will buy Powerball knowing that the expected value is negative. But they will do it anyway because they don't know any better. They're financially illiterate. If you own Cassava, you're financially illiterate. And having said that, Powerball is fun. You have a chance to win. Great, but just don't put all your stock account into Powerball. And Powerball at least has a winner. Cassava's not going to have a winner. But you know, this drug from GSK was going to be my drug. I was going to pay $5 million to license it at my company Retrophin. I decided not to.
Autofilled.
And then 𝗕𝗏𝗡𝗏 got it. But even 𝗕𝗏𝗏𝗏 waffled. They almost didn't do it either. And GSK called me saying, oh, the other party, who I didn't know was 𝗕𝗏𝗏𝗏, the other party's playing games. Do you still want it for $5 million? I said, I'll get back to you. I'll run it up the flagpole here. And we said no. And that was it. That's the story of 𝗕𝗏𝗏𝗏. Oh, a lot of people don't know this one, but I also predicted a company called PRANA would fail their Alzheimer's clinical trials, and they did. And that caused a lot of stress, actually, because we shorted that stock at our drug company at our balance sheet, and our board didn't like that idea a lot, but we made a lot of money. So if you're brand new to biotech and you put all your money in Cassava, just take out half. You're not going to hurt yourself. You're probably even still up. Take out half, and then you'll learn something. And if I'm wrong, you could say, hey, Shkreli, I only made half the money I was supposed to make. Now you can go find me and punch me in the face. If Cassava works, I will not sue you or press charges. You just punch me in the face, okay? But I am literally trying to help you not lose all your money. I'm happy if you lose half your money, because at least you have something left over. And, you know, you could learn from losing half your money and still come back. But if you have all your money in Cassava, and after listening to this and you didn't diversify, sell half, you deserve to lose it all. Trying to see if I can get up to 5 or 10 million.
Autofilled.
My life's a little more complicated than it used to be.